Here's a summary of Meta's Q1 2026 earnings call, designed for clarity and to be read aloud. Good afternoon, everyone. Today, we're diving into Meta Platforms' first quarter 2026 earnings. This report highlights strong community engagement, robust business performance, and significant advancements in their artificial intelligence initiatives. Key financial metrics and performance. Meta reported a solid Q1 2026 with total revenue reaching $56.3 billion, a substantial 33% increase year-over-year, or 29% on a constant currency basis. This growth was primarily fueled by their family of apps segment, which saw total revenue of $55.9 billion, up 33% year-over-year. Within this, advertising revenue climbed to $55.0 billion, also up 33%, or 29% in constant currency. Impressions served across their services increased by a healthy 19%, driven by user engagement and optimized ad loads. The average price per ad saw a 12% year-over-year increase, benefiting from improved ad performance and better macro conditions compared to the previous year. Total expenses for Q1 were $33.4 billion, a 35% increase year-over-year. This rise was largely attributed to increased infrastructure costs and employee compensation, particularly for technical hires in AI. Meta ended the quarter with over 77.9 thousand employees, a slight decrease of 1% from the previous quarter, reflecting ongoing optimization efforts. Operating income stood at $22.9 billion, with an operating margin of 41%. Notably, the company reported net income of $26.8 billion, or $10.44 per share. This figure was significantly impacted by a substantial $8.03 billion tax benefit, which partially relieved a prior non-cash tax charge related to U.S. R&D expenditures. Absent this benefit, net income would have been $18.7 billion, or $7.31 per share. Capital expenditures were $19.8 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $12.4 billion. Management's outlook and forecasts. Looking ahead to the second quarter of 2026, Meta forecasts total revenue to be between $58 billion and $61 billion. This guidance incorporates an approximate 2% tailwind from foreign currency. For the full year 2026, total expenses are projected to remain in the range of $162 billion to $169 billion, unchanged from prior expectations. Meta anticipates delivering operating income this year that will be above 2025's operating income. Capital expenditures for 2026 are now expected to be between $125 billion and $145 billion, an increase from the previous range. This adjustment is primarily due to higher component pricing and additional data center costs to support future capacity. The company expects its tax rate for the remainder of 2026 to be between 13% and 16%. Key highlights: AI advancements and Muse family of models. A major highlight was the release of the Muse family of models, including Muse Spark and an upgraded Meta AI. This marks a significant step from Meta Superintelligence Labs, demonstrating progress towards building leading AI models. Muse Spark is already powering Meta AI, leading to substantial increases in its usage and App Store rankings. Community growth. Over 3.5 billion people use at least one of Meta's apps daily, with Instagram and Facebook showing continued growth in daily and monthly active users, driven by video engagement. Threads is also on track to become a leading app in its category. Personal and business agents. Meta is focused on developing personal and business agents to assist billions of people and entrepreneurs. The vision is for AI to amplify human capabilities rather than replace them. Early testing of business AIs has shown a tenfold increase in weekly conversations. Recommendation system improvements. Significant AI-driven improvements to content recommendation systems on Instagram and Facebook have led to increased engagement, with Reels time spent up 10% on Instagram and total video time on Facebook up over 8%. AI glasses momentum. AI glasses, including the new Ray-Ban Meta optics, continue to perform well, with daily users tripling year over year, positioning this as a rapidly growing consumer electronics category. Efficiency and infrastructure investment. Meta is investing heavily in infrastructure, including custom silicon and AMD chips, to enhance efficiency. They are also increasing their infrastructure capex forecast due to higher component costs. Lowlights/challenges. Internet outages and restrictions. A slight decrease in total family daily active users was attributed to internet outages in Iran and access restrictions for WhatsApp in Russia. Infrastructure cost increases. Higher component costs, particularly memory pricing, are driving increased infrastructure capex. Legal and regulatory scrutiny. Meta continues to monitor active legal and regulatory matters, including headwinds in the EU and US, which could materially impact business and financial results, with potential material losses from scheduled trials in the US. Reality Labs decline. Revenue from the Reality Labs segment decreased by 2% year over year, primarily due to lower Quest headset sales, though this was partially offset by AI glasses revenue growth. Most important statements from management. Mark Elliott Zuckerberg, CEO, on AI and personal superintelligence. Mark emphasized Meta's distinct view of AI as a tool to amplify human ability, enabling people to achieve their goals in health, learning, relationships, and careers. He believes human progress will continue to be driven by individuals, and AI will make people more important, not less. The company is building personal and business agents to empower individuals and entrepreneurs. On Muse Spark and future models, he highlighted Muse Spark as a significant milestone and the foundation for a world-class Meta AI assistant, already leading in areas like visual understanding and social content. He confirmed that they are already training more advanced models and are on track to build a leading AI lab. On product cadence and quality, Mark stressed a focus on quality over hitting specific dates for product launches. He stated that their research team is focused on building increasingly intelligent models, while the product team is now empowered to build on top of their own strong models, leading to a continuous loop of iteration and innovation. On shopping and commerce, he sees a significant opportunity in empowering individuals through AI agents for shopping and other personal goals, differentiating Meta's approach from competitors by focusing on individual empowerment and consumer-friendly experiences. Susan Lee, CFO, on revenue drivers and monetization. Susan detailed how Meta's revenue is driven by delivering engaging experiences and effectively monetizing that engagement. She highlighted improvements in content recommendation initiatives and the expansion of ads on newer surfaces like Threads and WhatsApp status. On monetization efficiency, she elaborated on efforts to increase monetization efficiency by optimizing ad placement and improving performance for businesses through AI deployment across their systems. This includes advancements in ad models like Lattice and GM, and the rollout of the Meta AI Business Assistant. On infrastructure and future spend, Susan acknowledged the increasing importance of compute and the significant investments being made in infrastructure. She noted a $107 billion increase in contractual commitments for cloud deals and infrastructure agreements to secure future capacity. She also confirmed ongoing planning for future capacity needs, expecting compute to become even more central to the business. On employee base and efficiency, she confirmed plans to reduce the employee base in May, aiming for a leaner operating model to move more quickly and offset substantial investments. In summary, Meta delivered a strong first quarter of 2026, driven by robust ad revenue and significant progress in their AI initiatives. While facing increased infrastructure costs and ongoing regulatory scrutiny, the company is strategically investing in AI to empower individuals and businesses, positioning itself for long-term growth and innovation.